Welcome, everyone, to the Space Capital 2022 annual meeting. To kick things off, we're going to discuss some of the key trends and big ideas that we believe are driving growth in the space economy and how we're thinking about them as seed investors. I'm Chad Anderson, and I'm joined by my fellow managing partner here at Space Capital, Tom Ingersoll. And we are pleased to have Justice Killian joining us. He has been instrumental in building our firm and was recently promoted to partner. He's going to get us started with an overview of some macro trends.
Thanks, Chad. Over the past 24 months, it's become clear that there's a new set of forces shaping our markets. The lingering effects of COVID-19 and the risks of future pandemics, the rising tensions and risk of global war, the changing climate and risks of migration, disease, and famine. These global challenges require global solutions. Governments and central banks around the world have responded with monetary and fiscal policy that has helped manage these forces in the short term. While coordinated responses have instilled confidence and helped fuel our public market returns, the real economy has been slow to work through these shocks. Supply chain disruptions and a tight labor market are causing prices to rise at the fastest rate in decades. With this increased uncertainty, public market returns year to date have largely been negative. Private market flows peaked in 2019 and have continued to be robust through 2021. Venture capital has increased as a proportion of private market investments and saw record flows in 2021, driven by large funds and faster deployment schedules. We continue to see value in time diversification and have maintained a consistent deployment schedule since our inception. Zooming in on venture capital activity, we see deal count continues to be strong, with average round sizes increasing, particularly over the last year. The impact of these larger rounds has caused valuations to spike, with seed stage opportunities still being a very attractive entry point. In a market completely devoid of pricing discipline, we have achieved 7.2% ownership across our portfolio and believe there is opportunity to increase our average ownership over the remaining fund. SPAC activity ramped up in 2019 and has provided a mechanism for companies to raise large amounts of capital with limited regulatory oversight on the public markets. The financial incentives of these transactions have resulted in a wide variety of quality in terms of technical risk, customer traction, and business fundamentals. Many of the space SPACs have come to epitomize the wild growth projections on the back of limited achievements. The SEC recently proposed rules to overhaul SPACs by enhancing disclosures and investor protections. The proposal would tighten rules and forward-looking projections, an aggressive response that could slow SPAC activity to a trickle. We continue to have a high conviction in our portfolio and our pipeline, prioritizing teams with track records of success, technical foundations within the laws of physics, and market opportunities that have a history of paying off. In times of uncertainty, governments and industry leaders rely on objective data and actionable insights. The current market environment drives demand for the companies in the space economy. Our team sees opportunities to build and grow at the intersection of these global challenges, and we believe the value of deep technical expertise and the strong fundamentals will be rewarded in this new market environment. It's not enough to merely identify a market opportunity. You also need to have the category knowledge and expertise to pick the winners. Diligence is a lost art, but our repeatable process has proven its importance. The Space Capital team is uniquely qualified to navigate the current market environments.
Thanks, Justice. Space technologies are critical infrastructure that operate at a global scale. It's perhaps nowhere more apparent than in the Russian invasion of Ukraine, which has spotlighted its growing strategic importance. Back in mid-November, Russia obliterated a satellite in a weapons test, then warned that it could do the same to GPS satellites. From the beginning of this conflict, space has taken center stage and is clearly among the critical domains to protect as this conflict unfolds. The commander of the US Space Command recently called space domain awareness the command's #1 need. And our portfolio company, Leo Labs, is currently the only large-scale commercial source of data and services for low Earth orbit. They represent a unique opportunity to augment and complement existing national defense space domain awareness assets. They tracked this Russian ASAT test and provided accurate data several days before anyone else was able to, including the US government. The invasion of Ukraine has also highlighted the growing capabilities of commercial satellite imaging companies. Maxar, Planet, and BlackSky have provided essential Earth imaging as the conflict has intensified, delivering a foundation of truth to what's actually happening on the ground. Leaders in the intelligence community said that they have a great partnership with commercial imagery providers and that the challenge is now actually gleaning insights from these vast data sets, something that several of our portfolio companies are working on. SpaceX has donated thousands of Starlink terminals and associated internet services to Ukraine, ensuring that Ukrainians have access to vital communications and that the world can see what's actually happening on the ground. A common military tactic of cutting off vital communications has proved all but impossible for Russia, with Starlink ensuring that Ukraine stays connected and is able to combat Russian propaganda and win the information war. The commander of US Space Command said that what we're seeing with Starlink capabilities is really showing us what a proliferated architecture can provide in terms of redundancy and capability. Cybersecurity has been an increasingly important topic with regards to space assets in the last few years, but the current conflict puts an exclamation point on these concerns. In fact, this is so important to SpaceX that they shifted all their company resources to keeping Starlink satellites online and functioning. The space economy has experienced exponential growth over the past decade, with over $250 billion of private capital fueling innovation across 1,700 unique companies. But it appears that Russia hasn't been paying attention. They're still acting as if it's 10 years ago and they're the only game in town. In response to sanctions by the West, the Russian Space Agency chief threatened to end the 20-year cooperation on the ISS, saying that without the Russian segment, the space station would be incapable of maintaining its orbit and would crash into the US or Europe. But SpaceX was quick to show how their Dragon spacecraft could effectively fill that void. Further, Russia has suspended launch activities at the European launch complex in French Guiana and then refused to launch the UK's OneWeb satellites, seemingly thinking that this would strand the company without access to orbit. Even though they're a competitor, SpaceX was again ready to take up the mantle and has already picked up that contract. Russia refused to export any more of its rocket engines to the US, but does that really matter? The US has known for some time that reliance on Russia was a vulnerability. The CEO of United Launch Alliance, a Lockheed Boeing joint venture, said that the company has all the Russian engines that it needs for its remaining Atlas launches before retiring the vehicle and switching to its next-gen rocket, which will be powered by Blue Origin's BE-4 engines. And Ursa Major, a Colorado-based engine manufacturer, just delivered its first 2 Hadley engines to customers. The first ever rocket engines qualified for both hypersonics and space launch applications. In short, the US industrial base has been preparing for this moment. The traditional mindset of the military is evolving as the Space Force takes a broader view of providing space capabilities to military forces at sea, air, and in the field. And that means using commercial capabilities that can be deployed far more rapidly and cost effectively than traditional systems. This conflict has the potential to accelerate innovations that were less appreciated prior to the crisis. And it's clear that the strategic and commercial value of the global space economy is experiencing one of these accelerations right now. I pass it over to Tom to talk about the climate opportunity.
Thank you, Chad. I appreciate the opportunity to talk about the great climate opportunity. You know, it's both an opportunity, but also a challenge. Climate is something that we all face and something that we're going to have to work on collectively as a society. But what we find is that the problem is global in nature, and that in order to get the information that we need global intelligence. Turns out satellites tends to be the very best way for us to do that. I have had the opportunity and the privilege to work with a number of the leading climate scientists around the world. recently was a speaker at the Techonomy Climate Conference with one of our portfolio CEOs, Stéphane Germain from GHGSat. Also have the opportunity to work with the former chief scientist at the Jet Propulsion Laboratory, Dr. Dan McLeese. He and I are working on a project to measure methane emissions around the world. Dan is also a co-founder of one of our portfolio companies, Muon Space. And what you see in the climate is the challenge around complexity. And there's so many interactions of systems that to be able to get the information that is needed to really address the problem, satellites are going to be a very, very key part of it. And also it's so complicated that you really need to understand the details of the science behind it. And I think here at Space Capital, we do have the insight and the connections and the visibility to be able to do that. We've taken our learnings and we've generated the Great Climate Opportunity Report with Silicon Valley Bank. And in that, we try and unpack what we think is $1 trillion investment opportunity that's going to happen. But I think the caution that we've got and that we're seeing is that the market is still early and there's still a lot that has to be unpacked to create a true market. This slide, I'm trying to convey the fact that it's very, very complicated. There's a number of pieces that have to play together to be able to get actionable data and to be able to create markets. There's a number of satellite companies that are out there that are gathering pieces of information, but there's a lot more work to be done. And it does take some very informed understanding of the ecosystem to be able to pick out who truly has value and who can address the important opportunity that lies ahead. And the key piece of this, and the part I want to talk a little bit about, is what we call this flywheel, the climate market opportunity flywheel. And it combines the technology, data, markets, policy, and regulation. We're early on in the development of really climate as a market. It was an interesting comment that Microsoft has been, as you know, is striving to be a carbon neutral company, not only going forward, but they also want to try and cover all of the emissions from the past. To do so, they've been trying to buy credits in the marketplace, and they've been able. There are not enough credits to be purchased, so the market's not even large enough to support the demand. And where to get those carbon credits and how to be able to fill those gaps is really a problem that has yet to be solved. And the reason for that is there's just not enough data to be able to inform these markets. So without really good data, you can't have a good market. Without markets, you don't know how to regulate. And that all goes back to technology. So what's really important for us is to understand the technology that's required to be developed that can get the data that's actionable, that can then drive the markets and support policy, and that flywheel continues. And so we're investing right now in both the technology and the data segments to ensure that the data, the kind of data, the actionable data that's needed that can build a market that can get this thing going. And again, we're very involved in details in each part of this. I'm personally involved in the technology, also involved in the data side, watching the market side. So we're going to continue to do this, but we do believe there's significant opportunity here. It's an area where we're going to continue to invest, an area where we think we have unique insight. And one where we think we can not only make money, but also have an impact on society and climate. So thank you, Chad. Back to you.
Thanks, Tom. As thesis-driven investors, we dive deep to understand market trends. The SATCOM Playbook is our latest report published in February, and it's an investment thesis for ubiquitous connectivity in a future where every person, device, and object on the planet is connected. The nature of satellite communications is in the midst of a fundamental shift, and the magnitude of the coming disruption cannot be overstated. The sheer volume of satellites deployed by new entrants has already changed the capacity that's available from orbit. And as next generation satellites begin delivering service next year, with many reaching full constellation size in 2026, we expect to see the commoditization of capacity and the continued consolidation of operators as differentiated services become increasingly important. SATCOM is currently a niche comms product. It's less than 1% of total global broadband. But with over 30,000 total planned satellites across low Earth orbit, satellite will be soon be managing a third of the world's international internet traffic. SATCOM is essentially going from backhaul to backbone. And by next year, 90% of the world's capacity will be in the hands of 3 players. This serious concentration: SpaceX, SES, and the newly combined Viasat Inmarsat. And this will continue to be reinforced as Amazon joins the party in the next few years. We don't have any capacity figures yet for China, but it appears to be a constellation of at least 13,000 satellites, similar to Starlink. Telcos and SATCOM operators' need for higher throughput, broader coverage, and dynamic prioritization could drive hybrid satellite and terrestrial communications capabilities. Multi-orbit antennas are incredibly important. The way that SES is making investments is almost as important as what SpaceX is doing. Customers are calling for terminals that can communicate with satellites, whether it's in different bands or different orbits or even operators. We are beginning to see a future where every person, device, and object on the planet is connected. What does this mean for seed stage investors like us? We're not investing in these multi-billion-dollar satellite constellations. We're interested in the new capabilities that this infrastructure is enabling. And we've already made several investments across remote operations and industrial IoT. Opportunities there in aquaculture, transport, and telehealth. We've also invested in mobility solutions, maritime aviation, and connected cars. And there's also opportunities emerging in connected living at the home and in travel. With that, I'll pass it over to Tom to talk about Starship and the emerging markets that it's enabling.
Thank you, Chad. It's my pleasure to talk about Starship and emerging industries because it is going to be such a transformational new capability in the industry. When you look at industry transformations and industry inflection points, there really aren't that many that cause significant disruptions, but Starship will be one of those. And I liken it to really the transition from Web 1.0 to Web 2.0 and cloud computing that transformed the internet industry. Starship is going to transform the space industry. This is a chart that compares the Starship to the SpaceX Falcon 9. Falcon 9 was really kind of the equivalent of Web 1.0. It did have an impact on the industry, but Starship's a whole new game. Look at the volume, the differences. The Falcon 9 will launch 145 cubic meters. Starship 1,000 cubic meters. The mass, again, a factor of 15 or so in different mass. And what that means to the industry is significant. Think about what's happened with the James Webb Space Telescope recently. You've all been aware of that. You've been watching it, the excitement associated with it, the anticipation of the science that it can bring. But much of the cost and complexity associated with that was aligning all of those mirrors and having it fold up and then have to deploy and align perfectly. That's where the complication, the expense, the delay occurred. If you had a system like Starship that could launch much, much larger and much heavier objects, much of that complication would be gone. It would have been far cheaper, far faster, more reliable. And that kind of impact is going to cascade throughout the industry. Starship is going to be a game changer, period. And if you look at how money is being spent today, there is, many, many billions of dollars being invested in the space sector. And we outline that in our investment space quarterly. But unless you're looking at that with an eye toward what's going to happen with Starship, you're going to make some bad investment choices. We've looked at several deals just in the past couple of months that, frankly, it's wonderful technology for the space industry of the past. But when you look at what Starship's going to do, there's no longer a need to design for highest cost, lowest weight, or highest performance and pushing the envelopes of performance without regard for cost. That's no longer going to be the case. And so being able to understand the impact of Starship and factoring that into your investment decisions is really, really important. As we look at the space community going forward and we look at the impact, I think what we're trying to say to the marketplace is that while venture momentum continues and will continue to grow, much of that capital, as we see it, are chasing old solutions. And it's really going to take a team like Space Capital that understands the intricacies of the market. They understand the trajectories and the cascading effects of this technology to make good choices. We are looking at companies that are going to leverage and be able to grow because of what Starship is bringing, and not be threatened by the changes that are coming. Again, if you look at the ability to launch large structures that are not optimized for mass, you look at being able to launch large structures that have to be aligned, that don't require, kind of origami kinds of systems to be unfolded. You look at the ability to launch, even if you think about, something that I think about that's coming is if you look at additive manufacturing machines that get launched to space, and then you're just launching raw materials that you could actually construct things in space. All of that is going to be enabled by Starship. So we're very, very excited about what's to come. We think we have a very unique understanding of the impact that this is going to be on the marketplace, and we're making our investment decisions based on that today. Thanks, Chad.
Our team is closely monitoring these macro trends and investing accordingly. We believe we're in a new market environment driven by greater uncertainty around the world. Despite the macro headwinds in the market, it's clear that the strategic and commercial value of the global space economy is experiencing significant growth. In times of uncertainty, business leaders are hungry for insights and information, which is exactly the type of data that space companies provide. In fact, many of our portfolio companies have seen an increase in demand for their products and services. SpaceX already fundamentally changed the economics of space 10 years ago with their Falcon 9 rocket. And Starship will have a similar impact, further reducing the cost to orbit, enabling emerging industries, and making existing infrastructure obsolete. As investors in this category, we're looking for founders who see what's coming and are building for this new reality. Climate's a nascent market that is rapidly evolving, and it takes a deep understanding of the technology and market factors in order to invest wisely. It's not enough to merely identify a market opportunity. You also need the category knowledge and experience to pick the winners. And the Space Capital team is uniquely qualified to run the strategy of today and tomorrow. Thanks for your time. Looking forward to interacting with you for the rest of the day.